Hi, this is Alessio, Rastani, leading trader. Hope you're well, and welcome to this update on Bitcoin. So in this video, we're going to discuss the huge drop we saw in Bitcoin yesterday and what this could potentially mean. How bad is this? And what are the implications for Bitcoin in the next, potentially next few weeks and next few months, which is obviously going to be very important. Let me just first of all start by showing you this. I don't know if you saw this in my video yesterday, but it's quite important to mention this. As I was making my video yesterday afternoon, you might have noticed something quite interesting, and it certainly caught my attention, which is the pulse signal. Now you can see at the time I was making my video, Bitcoin was a 6200, 6205, okay, as you can see. And this happened on the pulse indicator. Look at that. So the red dots suddenly turned from red to blue. This is something we've been waiting for many weeks, at least for a few weeks. And finally, it happened yesterday as I was making my video. And I have to tell you, when I first saw it, I couldn't believe it. But as you can see, I've written it down here. The pulse appears to be firing to the downside, but not confirmed yet. But what that pulse actually meant was that a potentially big move was going to happen on Bitcoin, a transition from low to high volatility. And of course, because the momentum was to the downside, we're expecting the movement to be to the downside as well. And by the way, let me just say this, that we had no reason to be in Bitcoin in any case, because as I mentioned to you in my video yesterday, so let me just show you this. Just a few days ago, on the 13th of November, okay, this is what happened. Take a look at this. So on the 13th of November, Bitcoin, this is a Bitstamp chart, Bitcoin closed below 6,300. Now, why is that level important? Because as you can see, it closed below the last LT velocity position. One of the most important mathematical rules we have in trading is that when price closes below the last LT velocity position, we have absolutely no reason to be in the market. Why? Because it increases the risk of further movement to the downside, as we saw yesterday. So when you think about it, the market was giving us plenty of opportunity to protect ourselves against risk. So this is one of the most important rules we have in trading. And that is because you as a professional trader know by now that the markets are giving us probabilities and not certainties. But let me just make this very clear. There is one thing we've absolutely been correct about, 100% right about, throughout the last few months. In fact, I've mentioned this over and over again in my videos. Let me just play the clips very quickly. There is still a risk. There is a risk that Bitcoin could actually break the floor and breaks that 6,000, 5,900 floor. And if Bitcoin falls below 6,200, then, all bets are off. And again, the odds of a Bitcoin rally from October to December are going to be diminished. We don't want to see Bitcoin suddenly doing this, going back down to 6,000. If Bitcoin falls to 6,000, then no, I think the odds will significantly drop. All right, guys, so as you heard there in my previous videos, was that if Bitcoin was to drop back down to its previous levels, like 6,000, 6,100, and of course 6,300 in my recent videos, then the odds will change. The odds will massively change, and we have no choice but to change our minds. We must change our minds if the facts change. And that's why some of you said in my video yesterday, hey, Alessio, why are you changing your mind? The answer is very simple. Because the facts have changed. So let me show you again. When we saw the price of Bitcoin going below the LT velocity, going below 6,300, we had no choice but to change our minds. And that is how professional traders can, in fact, limit their risk and not end up being in this situation. And that brings me to a very important point. And guys, I know how it works on YouTube and social media. I know some people will scroll through the video at the most important points. But guys, I highly recommend, if you're watching this video and you want to learn a deeper truth about the markets, please don't fast forward this part, all right? Because it's so important. In fact, I highly recommend that those of you who want to take this seriously, buy this book you see here called Trading in the Zone by Mark Douglas. It is a fantastic book. It will change your life. And I think it's a first step if you want to become a professional trader. Here's what Mark Douglas says in this book. Read this part over here. He says, trading has nothing to do with being right or wrong. For the traders who have learned to think in probabilities, there is no dilemma. And he says that professional traders know that trading doesn't have anything to do with being right or wrong, because we know that deep down, the markets are all about probabilities, not certainties. And that is why, guys, a lot of folks on social media, they want the impossible. They want certainties when in fact the markets are based in probabilities and uncertainty. And also in this book, it says something interesting. It says we need to be rigid in our rules, but flexible in our expectations. What does that mean? It means that if you're following a system, if you're following a methodology, you must stick to that method, but be flexible in the outcome, okay? Because the markets can change their minds very quickly. And that explains why, as professional traders, we must be prepared to change our minds. Okay? So when the market goes below a certain level, like the LT velocity position, we must, as a result, change our minds and protect ourselves against risk. And of course, the people who do not choose to follow these rules end up losing more money because they ignore the risks. So one thing I would say this right now, guys, is this. At the moment, Bitcoin has taken out the key support level. The key support level right now is 6,300. All right. And then you might even say the key support level at 5,800 as well. So we have broken below this level. The unthinkable has indeed become the reality. So we have indeed broken key market structure. And as a result, this is very likely heading down to the 4,000s. Now, I don't think it's going to end at 5,000 levels. And by the way, guys, just to give you some context, the levels we are at right now are about the same levels we were at October of last year. I think we're about 5,000 October of last year. So do I think that's going to go potentially lower than 5,000? Yes, absolutely. And of course, we'll cover that in a separate video. But I've already mentioned that a break of market structure, a break of support, is likely to lead significantly to lower levels. And I think we are getting down. I think we're potentially going to head down to the 4,000s, 4,500s in the next few months. By the way, one important thing I am keeping an eye on here is the delta vortex, because notice this. Notice the delta vortex suddenly is now rising. Now, why is that important? It means that when the delta vortex gets above that line, we could potentially see, an orange and a blue signal like we saw over here. And when we get that, we could see a potential long or indeed a reversal or buy opportunity right there when that time comes. So there is something very interesting happening here on the delta vortex, and we can just be patient enough and wait for that to happen in the next few months. All right, guys, thanks very much indeed, and I'll see you guys in the next video update. Bye for now.